Chatbots are the headline. But data is the real AI story. Every video, audio file, and dusty document in old servers is now gold for AI. And someone has to clean it, organize it, and feed it into the models. So the question is simple. Do you want to chase the next viral AI app or own the backbone that powers them all? With rates cooling and big tech pouring billions into AI compute, the infrastructure layer is about to explode. I'm talking about the overlooked companies, the ones nobody notices. Today, I'm going to show you one such company, a tiny NASDAQ penny stock trading near $4 that could be the missing link in the generative AI pipeline. A $4 stock with 3 to 4 times upside in government validation. If you blinked, you might miss it. And here's the timely part. The AI infrastructure story is getting a catalyst wave right now. Interest rates are cooling, growth stocks get a second breath, and big tech is spending billions on AI compute. That spending is accelerating, not slowing down. That creates demand for AI data tools, because every AI model needs clean, structured data. Enterprise budgets are shifting from experimentation to deployment, meaning AI pilots are turning into real contracts. That's when infrastructure companies start winning. So the question isn't, will AI grow? It's, who gets paid first? Imagine you're at a party. Everyone's talking about the next chatbot, while the real money is being built behind the scenes. I've been studying AI infrastructure for years, and I've seen how the market rewards boring companies later. If you stay with me, you'll understand why this company matters, how its numbers stack up, and why the market isn't fully pricing it in yet. Real contracts, real revenue growth, real validation, not hype. By the end, you'll see whether this is a missed trend or a hidden gem. The crowd chases hype, but real money is made in boring infrastructure. Ask yourself, would you rather chase the next viral AI app or own the tools that power every AI app? Most investors will look at a flashy AI app and say, I missed it. The smart investor asks, who built the backbone? When everyone is chasing the front stage, the backstage gets ignored. That's where the real profit hides. Let's reveal the stock. This is Veritone Incorporated, ticker VERI, listed on NASDAQ, currently trading near $4 with a market cap around $376 million. Veritone isn't building a chatbot. It isn't building a consumer app. It builds AI infrastructure for unstructured data, which is the most expensive and time-consuming part of AI adoption. Their flagship platform is Aware, pronounced Aware. Think of it like an operating system for AI. It ingests messy inputs, video, audio, text, and transforms them into structured, searchable data. Think of it like a data refinery. Raw information goes in, usable intelligence comes out. Here's the key. Big tech like Microsoft, Google, and AWS can build the best AI models, but they still need clean, structured data beneath it all. Veritone sits before the model in the pipeline. So while everyone talks about OpenAI or NVIDIA, Veritone quietly does the groundwork. And that's exactly why the infrastructure layer is becoming the real battlefield. And the validation is real. Veritone closed a sole source contract with the U.S. Air Force Office of Special Investigations to deploy its AIware platform and IDEM's digital evidence systems. Not a pilot, but an enterprise deployment that starts recognizing revenue. They also boosted their VDR pipeline by over 50% through 2025, expanding near-term opportunities with hyperscalers and media partners. This isn't hype, it's government validation and the enterprise demand. Now let's get into the numbers, but keep it simple. From the latest reported quarter, revenue was $29.1 million, up about 32% year over year. Software products and services revenue was $22.8 million, up about 55% year over year. Annual recurring revenue was $68.8 million, up about 9% year over year. Cash on hand is about $36.2 million. A significant improvement from prior periods. Now, if you're thinking, okay, but what does that mean? Here's the quick translation. The company is shifting into higher margin software, and that's where the big money shows up. On a trailing 12-month basis, revenue is about $98 million, with gross margins around 67.8%. Net loss is still deep but improving, and EBITDA is negative, reflecting ongoing investment and growth efforts. The big takeaway: the revenue mix is shifting toward higher margin software, which investors tend to reward. Now here's what analysts are saying. Veritone's consensus analyst rating is strong buy with an average price target near $10, implying roughly 145% upside from the current share price near $4.07. And the range tells you the story. The low target is around $2, reflecting risk and volatility. The average target is around $10, which implies about 145% upside. And the high target is around $23, which implies about 460% upside. These aren't guarantees, but they're based on real analyst models. And importantly, the team reiterating buy ratings, including the view that Veritone's infrastructure strategy is gaining traction. Now, let's make the numbers visual. Imagine this: $98 million revenue and 67.8% gross margin. That's like running a factory where the raw materials cost you less than a third of what you sell. The real opportunity is the shift to software. Veritone's software revenue is growing faster, and that's the key. Because software scales. The cost to add a new customer is much lower than hardware. That means the company can grow revenue faster than costs, which is what investors call operating leverage. Here's the valuation logic. With a live market cap around several $100 million and a growing SaaS segment, Veritone still trades below many AI software peers on a price-to-sales basis. That makes sense when a company is unprofitable. Investors price in uncertainty. But if software revenue continues growing faster than costs, operating leverage kicks in. When revenue grows, profitability improves faster than revenue. Veritone isn't just selling scanners and services. It's selling infrastructure that feeds every AI model, and that's powerful. Add in sticky government contracts, media archive licensing, and hyperscaler data partnerships, and the revenue runway looks bigger than most realize. Now, let's break the next 6 to 12 months into scenarios. Conservative case, $6, about 50 to 60% upside. Base case, $10 to $12, about 150 to 200% upside. Bullish case, $15 to $23, about 300 to 460% upside. These targets aren't random. They're based on revenue growth accelerating, software mix increasing, and operating leverage starting to show. Think of it like this. If Veritone can grow software revenue by 50% plus while holding costs steady, the company starts generating real profits. The market loves profitable software companies, and the stock re-rates. Right now, Veritone is priced like a risky, unprofitable startup. But the reality is, it's a data infrastructure company with enterprise adoption and government validation. That's a very different risk profile than a random penny stock. Now let's put VERI into a portfolio context. Think of AI investing, like building a house. NVIDIA is the power engine. OpenAI is the flashy apps. Microsoft, AWS, and Google are the foundation cloud. Veritone is the plumbing. It's not pretty, but it's necessary. If you already own cloud giants, Veri can act as the niche AI data infrastructure play that benefits when AI adoption scales. And that's the key. Most investors buy the model layer, not the data layer. But the data layer is where adoption becomes real. Here's the big question. When AI adoption explodes, who do you think gets paid first? The chatbot or the company that prepares the data? Now, I want to hear from you. What intrigues you most about Veritone? Is it the AI data infrastructure angle, the government contract validation, or the analyst upside targets? Drop your thoughts in the comments. The best insights might get featured in the next video. And yes, this is not financial advice. It's perspective and analysis, so you can make your own decision. Here's what most investors completely overlook. The AI boom won't be powered by chatbots alone. It will be powered by clean data, and the companies that build the pipeline will win. If you miss that trend, you'll miss the next phase of AI. And that's a real regret. To recap, Veritone is AI infrastructure, not hype. It turns raw data into usable intelligence. Revenue is accelerating, especially software. Analysts see meaningful upside. And long-term value builds below the surface. If you found value in this breakdown, like the video, subscribe, and share it with someone thinking about AI infrastructure investing. Next time, we'll pair Veri with another AI infrastructure play, because smart portfolios think in themes, not single tickers. Stay curious, stay disciplined, stay ahead.